In order to protect themselves, the Cyprus government closed the banks 12 days, and people had limited access to their money. Long lines formed at the ATM machine.
The fact is that the confiscations in Cyprus were not a one-time event. The eventuality for this had already been planned in advance, and there are plans in place for confiscations of depositor accounts in New Zealand, the European Union, Canada, England, and the United States.
And we passed Dodd-Frank legislation. And people think, well, that's it for bailouts. No, that's not it. Actually, it's just going to be a bail-in. In order to maintain liquidity in failed banks, the European Union and the Federal Reserve have a policy of bailing in, which means you seize depositors' deposits. Those could be mom and pop up to their $250,000. It could be a city's deposits on deposit. It could be bondholders. That's what happened in Cyprus. That's what's happening right now with the Cooperative Bank in London, England, and that's what the Federal Deposit Insurance Corporation and the Bank of England have jointly agreed to do here in the United States.
The large global and Wall Street banks are the ones at most risk because they've been gambling with depositor money on risky derivative bets and other speculative investment devices, which means that when, not if, these bets start going bad, the banks will be on the hook for their deficient value. According to the Bank for International Settlements, which is essentially a central bank for the world's central banks, the notional value of these derivative contracts is an astounding $700 trillion. Think 700,000 billion dollars. The entire world's GDP is only $70 trillion. There's not enough money on the planet to cover these bets.